Wednesday, October 19th, market analysis. Stan Ehrlich, good morning. We're about 9:45 California time, halfway into the trading day. I usually start out with the S&P 500 and generally speaking the indexes, which I'm going to do again this morning. I repeat, last Thursday we had a gigantic bullish engulfing ER signal. This is an indication that the market has bottomed out. The signals don't tell me how far up it's going to go or how long it's going to last, but I use other tools to help me predict that, provide that information or prediction. And my answer is, I think the S&P 500 is likely to go up to approximately 410, and it's going to take maybe 1 to 2 months. Now, unfortunately, that's going to be another top, in my opinion, and we're going to go down to new lows completely for this bear market, eventually down to about 320, which is my minimum downside objective. And remember, we got down to 340 not long ago. So, at the moment, literally at this moment, this is real-time data, we are making it lower than yesterday's low by a slight bit. The market has had new highs yesterday morning for the previous week, I believe 7 trading days, a week and a half almost. So I like the way it's been acting. We've had a good rally from the lows of last Thursday. This is Wednesday again, so it's a little less than a week. And we deserve a little bit of a dip, currently down about 4 points exactly. Let's go look at the 1-minute chart details. And the SPY, as I said, is now making new lows for the day, and that begins the day right here. So opened, dipped a little, rallied a little, didn't go anywhere, kind of sideways for a bit, and now starting to slip somewhat. We're getting a little oversold on a 1-minute basis. That's extremely short-term analysis, but it does help me, and I think we're about to start to bounce back up. This is interesting. Remember, we are now lower than yesterday's lows by a slight little bit here. Going back to the daily data chart, and I'll zoom in a little bit. That means if we can, and I think it's quite plausible, start to rally and get above yesterday's high from where we are right now, that would be pretty good rally. We will again have another bullish engulfing green ER signal, which should push this market above 380 to make new highs for over a month. And that would be since the 21st of September, about a month. I'd love that. I'd be able to convincingly tell people that the October lows past tense are in, and that would be last Thursday's low. And I do believe that to be the case already. I just don't have quite enough technical proof to be as certain as I'd like to be. But I'm pretty sure that the October lows are in. And we'll get to the October cycle in a minute, the seasonal cycle. Very, very predictable. Started talking about it back in August, and we seem to have it happen past tense last Thursday. Can't talk this morning, sorry. So, bottom line, we might dip down a little bit more. The DIA is close to yesterday's low, not quite lower. That's the ETF of the Dow Jones. The NASDAQ QQQ is close to yesterday's low, not quite lower. Only the S&P is a little bit lower than yesterday's lows, and the Russell 2000 is dropping off quite sharply, but it's not the same technical situation at all. So I'm leaving it out of my predictions at this particular point. Now, a little bit lowered wouldn't hurt. I don't mind. Not too much. I don't want to go below Friday or yesterday's low, Monday or Tuesday's lows, that is. I'm sorry. Last Friday and Monday of this week's lows. We're already at or a little below yesterday, Tuesday. So a little bit more slippage is not going to do any damage in my opinion. But closing below last Friday or this week, Monday's lows, could cause a significant problem. I don't think that's going to happen. So at this particular point, I recommend, in a very broad general sense, buying dips and getting out on substantial strength. All right, that's enough of the commentary for the overall indexes. Let's go look at the bond market for a moment. You know, as this market goes down, rates go up on a very short-term bank-to-bank basis daily, and we do see new lows at the moment for the 30-year long bond, the chart on top, and the 10-year notes on the bottom, which has a great track record. We have had a couple of fantastic trades in the 10-year notes in the last year or so. The bonds are now oversold. The 10-year notes are very close. We color the daily bars yellow when it's oversold. That means to me that it's very soon in time and very close in price, about to bottom out and rally. How much and up to what point, same thing, and how long it's going to take depends upon some other factors. But I think it's about to bottom out and start to bounce back up. If it does, that's going to help probably the indexes come back up again. Again, we're only down 370 on the spider. It's not much lower on the day. So not much problem with this. I am looking for a follow through to the upside very, very soon here. Now, the October lows. We're so far smack in the middle of October, and we have that gigantic bullish engulfing on Thursday of last week, which tells me the October lows are probably already in place. I'm looking for a move back up to approximately 410, which would be about where the horizontal line is right now. Somewhere in that ballpark, give or take maybe 5 points. Again, taking 1 or 2 months to do it. This is weekly data, not daily. And we'll look back 1 year and see that the market bottomed out during the month of October. It's not necessarily the middle of the month, any time, date during October. We were slightly late 2 years ago, but there's two lows, slightly early and slightly late, so averaging, if you want, it bottomed out around October. Again, October, another year earlier, 2019, 2018, late October. No particular low during 2017, but if you had bought during that time period for some reason, you would obviously have a profit. It just kept going up and up and up. Another downside low around October, actually probably in October during 2016, slightly early 2015, and I can tell you from my research that in approximately the last 30 years, it is around 90% likely to be bottoming out in October, and again, it looks like it has already done it. Hey, let's look at some futures. These are some of the probably the most popular futures contracts around, and I'll start with the E-mini, of course, the S&P 500 again. We are looking at 1 minute data. I am going to change this to daily so that it will reflect. Come on, it's loading. Oh, I'm sorry, I should have had at ES, goofed on the symbol. Here we go. You'll see the same thing I showed you a few minutes ago on the daily data chart, dipping down slightly below the previous lows, and now I have to have daily. I am sorry about this minor delay. There we go. Thursday's big green ER signal, a little bit of a dip, not a problem. Next chart. This is crude light. I got a bearish signal last Friday. It's been going down since. Today it's bouncing a little bit. Inside trading range, no lower than yesterday's low, no higher than yesterday's high, and a little bit higher on the current quote than the previous close. No big deal. Deserves a little bit of a bounce. and then down to new lows. I think it is going to challenge 75.30-ish, the low of the move that was around the 26th of September, and make lower lows. That's also good for a bull move for the next 1 or 2 months in the securities. I meant stock market indexes. So this sell signal, the red bearish engulfing vertical bar chart, daily data, is a ER bearish signal. I might mention, of course I will, that we have one on the top of the market. This is why I've developed this trading strategy. It's 100% automated. There is nothing for you to do, basically. We have an outside down day on the top of the market. We had one a little early, a couple of days early, and then a couple of days later, we had another one. So this did pick the high day for a broad double top and for months before and since. And that date was June 14th. Great signal. Next, we have a bearish engulfing yesterday for heating oil. Again, so far, it's only been a day, on top of the rally. We've made new lows for about 4 days this morning, and it's a pretty good down day so far. We'll see how this pans out in the next days and weeks to come. I had a bullish signal basically at the bottom. I had a bearish signal on the damn top day. I had another bearish signal on the top day, way back there in March 9th of 22. Some good signals. This is the YM Dow Jones Futures. We have the bullish engulfing on this daily data chart. Again, the beginning of a little double bottom. The date was October 3rd. This was last Thursday. Remember, the futures are open a lot longer than the ETFs, the DIA in this case, so the formations are a little bit different. Luckily, we got a bullish engulfing right smack on the low on the futures contract, on the YM for the Dow Jones Futures. Great signal. And I am so proud of this one. On January 5th, there is a bearish engulfing on the historic high day. Not close, not early, not late. The exact high day. I got a bearish engulfing for the ER signal, and of course it's the very beginning of this bear market. I didn't know it was going to be the beginning of the bear market at the time. Again, these signals I've developed do not tell me how far or for how long that signal is going to last. But hey, better than nothing. Bearish signal on the top day. There's a bullish signal at the beginning of this little rally during the bear market. Next chart. Nothing particularly interesting here on soybean oil, except that we're getting a little overbought on this rally. We have a minor upside breakout, and it appears we're probably getting close to a minor high, and it'll probably come back down to approximately 67.5 in a few days, and then maybe go back up again. Next, we have a bearish engulfing 2 days ago on sugar, and it is coming down. Not a lot, not real fast, but that's the high day 2 days ago on sugar, and the top of that huge rally and the beginning of this really big bear move we have had back on April 13th. Great signal at the time. Next chart. We've got a bullish signal on September 29th. This is live cattle, and we've got historically some pretty good signals here. Bearish signal on top, bearish signal on top of that rally just before it dropped off even more. It's not the high day, but my system catches within a few days the tops and bottoms frequently. It is the important high or low day for significant time frames, maybe huge time frames. I do remember that I got a sell signal in the Dow Jones Cash Index just before the subprime loan crash 2007-8. Wow, what a big one at that time. I had no idea it was going to develop into something as disastrous as what it developed into. Next chart. Nothing here of any consequence, and this is cocoa. Okay, next. We're getting a little oversold here on rough rice. Otherwise, nothing particularly interesting. Next, oversold for a few days now, and highly likely to start to turn back up again, like almost immediately. We have a potential double bottom. This is coffee, KC. I don't see anything great here except a couple of good sell signals, one in particular, way back December 17th of 21. But I think this is going to bottom out because of the oversold condition and double bottom potential. Next chart. This is bonds. We've already looked at it. New low, slightly higher rates on a day-to-day basis. Getting oversold. So I think it's about to turn back up again in the next few days, very quickly. I'm not sure how much. I can't get a good feel for whether this is going to be a major low or not. Doesn't look like it yet. A good buy signal on the bottom here for soybean meal. Nothing particularly great, nothing fancy. This one happens to be the 10-year notes. We looked at this already. Nothing here at the moment on soybeans. One of my favorites historically. I started trading soybeans in 1971 before the Russian grain deal. Love this one. Gotta love it. Bottom of the bear move, beginning of the bull market to the day. Next chart. Platinum. Pick the top of the market to the day. A couple of days after the top, we got a bearish sell signal back in August the 15th this year. And a few days ago, about a week and a half ago, we got a bearish signal, and we are almost a new low closing price at the moment, not quite, since that bearish signal. Good. Next. That's a bad bear signal. Bearish signal didn't work. We lost a little bit of money. We never stay in a bad trade for very long. Not going to go into any major detail, but we don't take big losses. Explanation point. We got a bearish signal on top there. We got a bearish signal on top there. I don't see any bullish ones at the moment. Right now we're overbought, so I wouldn't be a buyer. I would consider a short position for a short period of time, but it's not a signal. Next, gold. Bullish signal green on the bottom so far. But it is nosediving, and we are now in jeopardy of that signal being past tense, but it was good. It lasted 1, 2, 3, 4, 5, 6 days, a week, and for commodity traders, hey, that's not bad. So I picked the bottom for a week, and now it's failing, and we're not quite oversold yet, so it looks like this thing is going to challenge the lows we have seen so far. Next. We've got live hogs, overbought for a couple of days, coming up against resistance. I think this market's about to turn back down again. We did have a fantastic sell signal on the top of the market for Miss Piggy on February 23rd, 22. And not long thereafter, we also had on March 31st another fantastic bearish signal. Also, we had a pretty good one, not quite the highest high, but almost, on August 16th. Okay, next. High-grade copper. Bullish on the bottom of that break. A little in jeopardy at this particular point. Bear signal on the top of that rally. Next chart. Silver. Nothing lately. I'm a little disappointed in this. I thought I would get a lot more signals here. The overbought, oversold yellow is helping in terms of tops and bottoms, but they're not a signal per se. It's a warning, like a traffic light. If you see yellow, you know you're going to get a red soon, at least in the United States. Believe it or not, sometimes they change the yellow before it changes to green in some countries. Anyway, a little green one right there. It worked okay, nothing great. A few greens in here that were, so-so. I just don't have anything great in silver for some reason. Next, Oats, nothing. I'll just pass on that. And wheat, also no particular great signals, except for, you gotta love it, after screaming higher for a couple of weeks, limit up bid, lock limit up, closing limit up, day after day, we get a bearish sell signal on the exact high day before this long-term market started. Wow. What a hedging signal, what a short sale signal. Another one a little bit later on May 24th. Again, the one that was spectacular was on March 8th of 22. Next, natural gas on the top of the market, but that's back on August 23rd. And it's getting oversold now and coming down toward previous lows, some support, so I think it's going to bounce. And I think we have pretty much covered all of the commodities, nothing in corn, and the E-mini is where we started. So I'm going to leave you with one more forex chart. On the bottom so far for the euro dollar, we got a bullish engulfing. Again, the ER signal is built on purpose to try and catch the top day and low day for significant swings. When it's wrong, and it certainly is occasionally, we just don't take big losses. We have an automatic stop, period. I leave you with that and the sell signal on the top in the US dollar on the same day, September 28th. You have a great trading day. Talk to you tomorrow.